What's going on, traders? Today is day number 11 of the $1,000 account challenge, and today I'm up $38 in the account, or 2.66% of the total portfolio balance. We are nearly at that 50% mark, which is the first goal of the account challenge, to make back 50% of our initial investment. If you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. And like I said, we are on day number 11. So we took two trades today. Both trades were green. I'm going to walk you through both trades, the signals that came out, why I was looking at both trades, why I took the entries where I did, where I set my stop loss, why I set my stop loss where I did, and then where I closed the position out and why I closed it out where I did. So straight off of the day trade watch list today, we had Amazon as a long idea above $151. And my notes here were that it was a continuation range breakout trade idea looking for higher highs. Not only were we getting a range breakout, but we were also breaking above the $150 whole number. If you've been living under a rock, Amazon for the past month has been consolidating at these recent highs. The longer that a stock consolidates for, the bigger the breakout will be, the stronger the move will be, the more conviction the move will have when it finally does break out. So for that reason, because we have one whole month of consolidation here on Amazon, I actually took a little bit more risk on my entry than I normally would. Not necessarily in terms of sizing, and I probably should have sized up on this, but in terms of where I placed my stop loss versus the amount of profits that I was looking for topside. So I'll walk you through it. In the alert room, we're going to scroll up to the top for today. First mention at 9:31 a.m. So literally market opens 1 minute later. I say I loaded Amazon long and I give you the contracts. No position here just yet. Why would I do that? I'm going to move to the 1 minute time frame. Why would I do that? Well, after the first minute, I see a pullback on Amazon, holds $150, the whole number, as a point of support. You get a bottoming wick, long bottoming wick here, signaling that this is buying pressure, right? Buyers are stepping in, holding support at the whole number, holding support at the PDC, and pressing this back up to the top side. Right away, I'm thinking Amazon right now has the power to probably break this trigger level and go, so I want to be prepared for it. So that is why the first minute, hey, I loaded the contracts. We're getting the move up above the trigger level here, loaded the contracts. Let's prep to take it long. 2 minutes later, looking to take Amazon long on a pullback to the trigger level area. Stop loss will be 151. Now, unfortunately, we did not get the perfect pullback. This was at 9:33, right? Right here. We did not get this perfect pullback to the trigger level. And this is where I say, I assumed a little bit more risk in terms of risk versus reward here because of the quality of setup. So I've done a lot of this where this breakdown in my previous videos where I say, here's my entry, here's my stop loss, and then here's my potential profit margin, right? And then I'll go and say my profit margin there looked really big compared to my amount of risk that was assumed. And it's usually double. In this scenario, my amount of risk that I assumed on Amazon, I think I took the entry closer to the bottom of this candle here. The amount of risk assumed from the bottom of this candle down to the trigger level looks like that, and the potential reward up to a high of day, what we took looked like that. So our reward amount versus the amount of potential risk here, it's not that great. We're assuming, I was assuming a lot of risk when I take this entry. By the way, we'll timestamp the entry. 9:34 a.m. took entry on Amazon long. Here are the contracts. Here's my fill price. Here's my stop loss at 151. So I'm giving you all that information, right? 9:34 a.m. is going to be on this dip. I'm just thinking that this stock has already started to kind of take off, and I don't want this to continue to run and us miss it. Now, it does do exactly that, right? It runs all the way up to highs of $153. So it doesn't ever give us that perfect pullback to 151. So what was it that made me take this entry here and assume that large amount of risk? It was the quality of the setup. Like I said, Amazon has been range trading on the daily chart time frame for over a month now, and the longer that a stock consolidates for like that, the bigger that breakout will be, the more momentum you're going to have on the breakout, the higher conviction you're going to have on a potential breakout. So Amazon today, when it took off and pressed those higher highs, it's ready to go, right? It's already done. It's consolidating. It doesn't necessarily need to pull back at this time. That's why I took the entry where I did. Now we'll walk you through the sell price. I missed out on a lot of profits here. I actually top ticked one of the sells. I mean, this is pretty good because Amazon entered into a longer phase of consolidation here. So where I closed it out was pretty good. But I'll tell you, the reason why I closed it out was because I was looking for a 20% gain. So it's just walking you through the trade from here, right? Now up over 10%. I placed a sell target at 189, now up 15%, and then 936. I closed Amazon long for a 20% gain. Entry price 158, now 189. That sell target that I gave you a couple minutes prior, or that was the same minute. Okay, and then reminding you of just the contracts there. So that was the walkthrough of the first trade. Now the second trade that we took, it was on Rivian, RIVN. Off of the day trade watch list. Rivian was a side chart for me, but it was a long idea here above $23. Rivian recently has had a positive news catalyst, and it made some big moves. I'll show you here on the daily timer. It's been making some big moves. So it just made sense to me after getting that positive reaction from a news catalyst that we look for a continuation on Rivian. So it was a very clear trigger level placed at $23 today based off of the prior day's high, but also our pre-market high at 23. Rivian opens under 23, breaks above 23, moving to the 1 minute time frame. This entry was sniped. It happens very quickly, but I think that I did a very good job of preparing everybody in the alert room before this entry was taken. So you do get that perfect pullback retest of 23 as a point of support before the run up higher. So I'll walk you through the alert room here. Rivian, I give you at 9:38 a.m. Trigger level break worth watching. That's WW, worth watching here. Trigger level break worth watching. So 9:38, it's happening right here, right? Well before we take our entry. I'm mentioning the stock to you right now. It's worth watching. Keep an eye on it. 2 minutes later, 3 minutes later, Rivian, I give you my contract selection. So here are the contracts that I'm watching. No position yet, and that was at 9:41. So as this is pressing up, 9:41, here's my contracts that I'm watching, and no position yet. Get ready to take an entry, though. So you should have already been watching the stock. You have the trigger level already at $23, right, off of the day trade watch list. You now have the contract selection, so you load that into the active trader. All that you are waiting for here is a dip to take your entry. So we do get that. All you have to do at this point is press buy, right? We do get that perfect pullback. 9:43 a.m. Rivian, I took the entry, and I pretty much bottom ticked this. I guess my entry came at the turn of the minute. Because I did see this pullback happen, and I think I took my entry on the pullback, but I think that by the time I typed the alert out, it was at the turn of the minute here. So the alert actually comes out on this candle. Then from here, it's just trade management, right? We get the bounce up off of the trigger level, never breaks below the stop loss here. So our risk off area actually, I think, was the previous day's closing price is what I mentioned. Though we weren't even red on this trade at all. What did I say here? Yep, stop loss will be a break below the PDC. So my potential risk off level looks like that versus the amount of reward up to the high of day looks like that. So our reward amount versus the risk amount, that is nearly double. That's about, it's a bit more risk there, but that's about what I normally go for, right? I try to go for double the amount of reward versus the risk amount that is assumed. And like I said, Amazon was an exception today. So we do get the run up into the high of day. I wound up closing this trade out at 15%. I was looking for a 20% gain on the contracts, and I think maybe at the top we might have hit that, but the contracts were moving kind of slow. I think that they were kind of a bit spready. So whenever we did get the 15% offered, I just went ahead and took the trade, took the profit. So when we got the pop move up into the high of day, I went ahead and just secured the profits. I didn't want to see this reverse and come back down, which it did shortly after. So we're only missing out on a little bit here. We caught the majority of that move, which I'm really happy about. Okay, that's it. That's the two trades that I took today. Again, in the $1,000 account challenge, we are nearly at that 50% mark. So we're going to keep grinding. Thank you so much for watching the content. I hope that it's helped you out. Learn what an A+ setup, learn what your A+ setup is. And that way, when you see it breaking out or confirming, you have to have the conviction to take that trade. Again, thank you so much for watching. Take care, enjoy the rest of your day, and I will see you tomorrow when we continue the $1,000 account challenge.